Every trading mentor talks about making this, or even this, but do they even really make that? Reality is that probably 90% of them have never even done it themselves. So in today's video, what I'm going to do is I'm going to show you how to make money and start learning how to become profitable in the trading industry, specifically Forex trading. So welcome to Forex for Beginners, the only course that you're going to need that's completely free, and it's going to take you step by step online to get you started in trading. So even if you know nothing about trading at all you have to do is watch this video, and I'm going to teach you exactly how to make money for just trading 1 hour a day. One of my favorite things about trading is that you don't need any money to start learning. And don't worry, I'm going to take care of you and show you how to do that. This is the exact video for you if you want to learn how to become profitable while learning the most profitable skill set that you could ever imagine. So no matter where you're at in life, no matter what position you're in life, this is a great skill set to learn because you can really start with $10, $100, or even thousands of dollars. It's really all up to you and on you. And that's a great starting point to learn an incredible skill set. Whether it's you want to just pay a bill or make $1,000 to $2,000 extra a week, by the end of this video, you'll be well on your way to being able to do that. I remember when I was young, 17, just started trading, I didn't have references like this. Now we have YouTube University. That's why I'm here to give you guys a completely free course to help you make money. It just brings me joy to knowing that I can help people for completely free and change their life. I have a whole series on YouTube that I've already done a free course on. This is just a more updated, better version of a course to help you learn. What did the bull and the bear fight over? Whether it's gonna go up or down. It's a trading joke. If you don't know trading, watch this video until the end because you'll know it by then. My entire point of this video, the whole reason I'm doing this is to help you get financial freedom, to do whatever it is you want, however you want, to buy anything you want, to live the life that you want and the life that I've been able to give myself and my family. It's all because of trading. And yeah, it's just awesome actually. This is not the time for you to quit your job. This is not a time for you to run to your parents and say, I'm retiring you. Don't be a dumbass. Let's just start with the basics and let's get you going and let's get you started on the right path. So before we can really dive into Forex, I just want to let you know that there's tons of different types of markets in the trading space. You have futures, you have options, you have stocks, you have crypto, so much more. But trading is the largest industry in the world. But Forex is actually the largest of all the trading markets. That is actually one of the main reasons why I chose to start trading Forex. But more specifically, why I chose Forex was because of the ease of ability to get into the market. There was a lot of good, valuable information. Also, the lack of capital that was needed. Like I said, I was a 17-year-old broke kid that really had nothing going for him. High school dropout, you name it, the worst of the worst. And you could start with $10. And I thought that was just really cool that I could learn a skill set with only $10 and actually do something with it. So let's get down to the point. You're here to make money, right? How much money can you actually make trading Forex? You know, you have all these gurus that are like, oh, you can make 1% a day, 2%, 3%, even 10% a day. The reality is the largest hedge fund in the world, the number one, the best hedge fund in the world, only makes about 70 to 80% a year on average. And that's even really high. When you're first starting out, don't expect to make more than 0.5% to even 1% a day, maybe even a week. But your first goal is to not lose money. Now, once you learn the skill set that I'm gonna teach you right here, you can make as much money as you possibly want. I've had hundreds of thousands of dollars days. I've had friends that have made hundreds of thousands of dollars days. That's because we learned the skill set, and once you learn that, you can really make as much money as you want. That's just the honest truth. But at first, you're not going to. Now it's time to get into the nitty-gritty, the actual learning of this and the entire point of this video, Forex. What that really stands for is currency pairs. So you're trading one currency for another currency. And how do you read those? Okay, you have a list of major pairs, which obviously the USD is just a major pair. Everyone knows that. Everyone trades USD. All debt is paid back in USD. So you have the euro versus the USD. What is that? Euro, the euro dollar. Then you have the GBP. What is that? The British pound. Then you have dollars or currencies like USD CAD, which is the Canadian dollar. And then you have currencies like USD JPY. Those are your major pairs. Those are ones with the most volatility, the most volume, the easiest to trade, and the ones that I recommend you start learning on. And then the next currency pairs is the major crosses, which is going to include pairs like GBP, JPY, NZD, Chef. And what those are basically pairs that have maybe more volatility, but they have higher spreads, higher slippage, higher swaps, meaning that they're harder to trade because they're not a major currency. Then you have the exotic pairs. Now, these are pairs like the USD peso, the USD Turkish lira. I highly recommend completely staying away from those for now. They move a lot, they're harder to read, they're harder to understand. So just completely stay away from them, but they are good to know which ones they are. So what is a quote? A quote is just the price of the currencies that you're trading. So first you have the base, and then you have the quote. And let's say, for example, the price of it is Euro USD is 1.03. That basically is telling you that the euro costs 1.03 to the USD. The main form of calculating your profits or losses, which you're definitely not going to have after watching this video, is called a PIP, which stands for price interest point. Now, when you're looking at a chart, let's say you just go to Google and you type in the euro versus the dollar. You're going to see right now 1.03. Well, a PIP is the price of movement after that. So when in reality, the actual price is 4 to 5, even 6 decimals behind that, although that's all you're seeing. But I can look at a screen and say the price is 1.0348. And let's say it moves to 1.0358. That is called moving in 1 pip, which 1 pip can make you a penny, $1, $10, $100, $1,000, $10,000, even $100,000 in just one move. So earlier in the video, I referenced that you should only trade major pairs. The reason is they have a lower spread because they have a lot more liquidity. So you have a buying price and a selling price, and the brokerage is going to give you that. Now they're going to charge you the difference in that price. So you're charged that price in order to fulfill your order. All right, I know there's a ton of information being thrown at you and it's going to sound really complicated at first, but I promise you that once you go through the journey, once you watch these videos, it's going to start making sense, and then it's just going to become second nature, and it's always going to be there. I believe in you. Stick along with me, and I'm going to make you profitable. So what actually makes the Forex market move? Well, there's a lot of things. First, you got the central banks, you have major companies, and one of the biggest examples that I like to use is, let's say America wants to buy Coca-Cola from Mexico. Does the Mexico government accept the US dollar? No, they have to actually convert the US dollar to the peso. So that little transaction, which for us doesn't seem like a lot in our day-to-day life, but let's say Walmart is buying, I don't know, $1 billion of Coke. They have to transfer that money over to them in order for it to make money, in order for them to get the Coca-Cola, the product. Now, that little change is going to fluctuate the market by just a little decimal point, but you can profit and make money off of that. One of the most deadly, in both great and a bad way, of trading Forex, and it's only in Forex, which is another reason why I chose it, is leverage. It's like the golden egg of the why Forex is so powerful. Because in other markets like stocks, you're only getting like 1-to-1 leverage, maybe 1-to-2. In Forex, you can get 1-to-50 in the United States. Outside the United States, you can get 1-to-200. Anything above that is pretty high. But let's say you want to open a position of $200 value. Well, the beautiful part about Forex is you can actually leverage it from the broker, and let's say you have 1-to-50 leverage. They will actually give you a $10,000 position because of leverage. Now, how do you get that math? 200 times 50 equals 10,000. So you can start with a little amount, get a big position in order to profit more. Now, in currencies, obviously there's a ton of currencies all around the world. We have nicknames for those currencies. So like the Swiss franc. When you're looking at the chart and you see USD chef, we call the Swiss franc the Sheffy. At least I do. Maybe not everyone does. You know, you have the Japanese yen, and it's going to stay JPY. We call it just the yen. You have AUD, which is the Australian dollar. We call it just the Aussie. And then USD is USD. The Canadian dollar, we call it the CAD. So it's USD CAD. Those are just simple terms of really basic pairs, but you need to learn them because when you're talking to someone about Forex, they're not gonna go up to you and be like, oh, let's trade the US dollar versus the Swiss franc. No, they're gonna be like, let's trade USD chef. Very simple, but learn those terms. So some common terms in the market, let's talk about the bulls versus the bears. Now, if you're interested in this video, you're interested in trading, you've obviously heard of the bulls versus the bears. You've heard of the New York Stock Exchange bull. Now, a very easy way to understand this is the bullish market is a bull, you know, with the horns, kind of puts his head down and rises up. So a bull market is going up. Bears, what do bears do? They stand tall and they come down. That is a bearish market. Those are very simple terms that you need to learn when talking to somebody because they're gonna be like, oh yeah, the Australian dollar right now is very bullish, or the Australian dollar is very bearish. And you need to know to be able to understand that lingo. Also, you understand what a going long. Yeah, I know that's very simple, but going long means you're buying the market. I'm going short means you're shorting the market. Very simple terms, but you need to understand them to get in the Forex lingo. And then there's also other types of traders that reference themselves as maybe a scalper, maybe a swing trader, maybe an intraday trader. So what is a scalper? A scalper is a person that trades very short time frames, maybe the 1 minute, maybe the 5 minute, maybe the 15 minute. Then you have the intraday trader. What is an intraday trader? An intraday trader is someone that's gonna trade throughout one day or one session, and that is gonna be typically looking at the 30-minute to the 4-hour time frame, but specifically the hour time frame and taking trades on that time frame. Now, swing trader is what I am, and I like to hold positions for a long time because it allows you to get more data, take more calculated risk, in my opinion. And a swing trader is someone that's typically holding a trade for 3 days to even up to 2 weeks. I've actually held a trade one time for 3 months because I learned how to get paid by just holding the trade. So that's your 3 different types of traders. You have to figure out which one's gonna make it for you and classify you and be the best fitting for you. There's also types of traders as far as fundamental traders or technical traders. I believe in technicals. And what technicals is analyzing a chart, understanding what the chart's doing, why it's doing it. Fundamental traders are people that look at economic events, news events, if it's going to affect the GDP, if it's not. So what you really want to do if you want to become a fundamental trader is understand news events and world politics. And a really easy way to do that is check out forexfactory.com. It's going to have a list of full news events that's happening every single day all around the world, even the times, and if it's a low impact, medium impact, or high impact news. And you can expect when high impact news is coming for the market to move a lot, and you can really make a lot of money during those times. But be careful because you can also lose a lot of money during those times. Let's talk about what I personally think is the one thing that separates the haves and the have-nots in the trading industry. The people that become successful and the people that don't become successful. The people that stick with it forever and the people that give up. Basically, this side is the people that fail, and this is the side of the people that make it, which is where you're gonna be if you keep watching this video. It's mindset, all right? People come into this industry thinking they're gonna turn $100 into $1 million. The truth is, it's not really gonna happen. It's not likely to ever happen for you. That is a gambling mindset. So what I teach is how to take proper calculated risks and how to work on your mindset in order to understand you're going to win some and you're going to lose some, and that is okay. Proper risk, proper mindset, and understanding what the market is giving you is the key to becoming a successful trader. Stick to reading the charts, stick to understanding, stick with it, stick it out, and you will become a successful trader. Now, one of the most important parts of being a successful trader is understanding the trend. Is the market going into a buying direction or is it going to a selling direction? Now, you need to look for 3 pushes or 3 pulls. I call a push a movement to the upside with a retracement, and then a movement to the upside and a retracement. That's called a push. Now, you need 3 for it to be a trend. A pull is where the market pulls to the downside, retraces up, pulls back to the downside, retraces up, pulls back to the downside. So that's an uptrend and a downtrend. Downtrend, you're selling. Uptrend, you're buying. Now, there's also a third type of market, and it's called a stagnant market. That's at least what I like to call it, or some people call it consolidated. And basically what that is a market where you have 2 price points, and the market is just staying in between them, just like this. And you can trade inside of that zone. You can trade in that range. So you know the market's gonna bounce up and down. You take your sells off the high, take your buys off the low. It's very simple, but that is a very important, that is a key step to learning whether you should be in buys or sells, and that's how you're gonna become profitable trading. So in the Forex market, what I really like about it is you're not buying equity into a company, you're not buying stocks, you're not doing that. Basically what you're doing is essentially betting if the price is gonna go up or go down. So buying means you're going long. So let's say you buy here, and if the market is up here when you decide to close the trade, that means you profited. If the market, if you price is here and you decide to sell and the market's down here, that means you profited. Going long and going short is simply buying and selling. That's how you profit in the Forex market. Risk management really is one of the most important parts about trading for the longevity of a trader. I've seen a lot of traders in the industry that when they start out, they start risking way too much, and they tend to not hold their winners and they hold their losers. So they'll go into a trade and they'll profit, let's say $10, and then they'll profit $10, and then they'll profit $10, and they just profited 3 trades in a row and won 3 trades. But then they'll take a trade and they'll lose $50. That's called improper risk management. You just won 3 trades and lost 1, and you lost more money. That shouldn't be the case. So risking a certain amount per trade, every single trade, is the key to becoming a successful trader. Now, personally, I like to risk 2.5 to 7.5% per trade. When you're first starting out, I recommend risking less, maybe 1% per trade, until you can really feel comfortable in your setups that you think are always going to win. Now, if you want to stay in the industry a long time, risk management. And I have a really cool tool that I use it's called MyFXBook. And just go to myfxbook.com. They have a Forex profit calculator and a Forex risk management tool. Basically, you just type in the currency, and then you're gonna type in the percentage you wanna risk. You're gonna type in your stop loss, and you're gonna type in your account size. And it'll tell you exactly what lot size to use. That way, your risk management is on par. Now that you've learned what a pair is, what leverage is, and what all these different things are, now it's time to really dive into the charts, the fun part, the actual painting of the Picasso of the charts. The really, really fun parts where the money is made. I think we should just dive straight into that now. All right, there's a bunch of different types of charts, but the ones that I use, well, actually, honestly, I only use candlesticks, but you should know. So a line chart. How do you explain a line chart? It's very simple, it's very basic. It's actually exactly what it sounds like. It's just a straight line that does this. And typically the people that use that are long-term investors. Someone that's maybe buying into a stock that they really see in the future going. And it has very basic pullbacks. It cuts out the foo-foo, the wicks of the candlestick. It cuts out a lot of the nonsense, so you can just see the overall direction. Then you have a candlestick, which is what I use. And to be honest with you, at first I just learned a bunch about candlesticks. Now I use candlesticks because it shows 2 things. It has a body and a wick. And as you can see right here, this is what a candlestick looks like. You have an open price, which is the high, and then you have a closed price here, which is the low. That means the candlestick is obviously bearish, heading down. Red candle is what a lot of people use because red means going down. And then on the bottom half, you have a wick. Now that means that at a certain point, price actually went to that low, but it did not close in that time frame. And as you can see above, we have another wick that went above it. Now that means price went to that price point, but did not close above it. So what that tells you in the market for me is that those are false moves. So basically what that's telling me is that this false move happened, but price didn't close there, meaning that price point wasn't strong enough for it to close or hold, which is very good in the long-term trading when you become profitable. Then there's other types of charts like Heikin-Ashi or Rinko. I don't really use those. Rinko is really for trending, and it cuts out a lot of the fake stuff. I call it the Christmas tree because it literally just goes up in one solid color, down in one solid color, and it's usually green and red, and it looks like a Christmas tree to me. The Heikin-Ashi is a very, very complex way of trading. I personally have never used it, but if you want to learn about it, I'm sure there's a ton of information on YouTube, the YouTube University. But to keep it simple, stick with candlesticks. It's the easiest way to trade. One of the cool things about Forex is there's a lot of things called indicators. And what indicators are, they're tools for you to use to become successful. Now, I use very simple indicators. I use 4 moving averages. I use the 800. I use the 200 moving average, the 50 moving average, and the 18. Now, how to explain a moving average in the simplest form is that it's basically a moving line through the market that takes the amount of candlesticks that you are looking at. So let's say you have a 50 moving average. It's taking the last 50 candles and giving you the current market price of where it could be up or down. That's really simple what it is. I like to look at moving averages as magnets or trampolines. If price is away from the moving average, it usually attracts it. If price is right by a moving average, it usually bounces it off. Why I like to say it's either a magnet or a trampoline. It's also the easiest way to detect a trend. If price point of your candlesticks is above the 800 moving average, you're usually in an uptrend. If price point is below the 800 moving average, you're usually in a downtrend. That is a simple hack to be learning where the trend and what the trend is, and if you should be in buys or sells. If you have made it to this part of the video, I know you're going to be successful in trading because this is a lot of information. And I really hope that you have your notepad out and you're taking notes, because you're about to be taking a lot of notes trading and a lot of journaling. So good job. Cheers to you and props for making it this far in the video. Now, after everything that you've learned today, does that mean you're ready for real trading? No, it does not. You have learned just the basics of trading. But for you and for an ease of the mind, the next part is the fun stuff. The easier stuff, not the nitty gritty, not the little things that you need to know in order to just know. It's like the actual fun part, reading charts and being able to make money and getting the adrenaline rush of being in a trade and painting your picture, something that fits you, painting the charts the way you want to and what makes sense to your brain, because there's hundreds of thousands of ways to make money in this industry. And this is where we're going to figure out what type of trader you are and how I can help you become the most profitable. And if this video helped you, please hit that share button. And I will see you guys in the next video where we can start mastering the artwork of painting your Picasso.